Super Microcomputer stock, SMCI is the ticker symbol. I wanted to take a look at Super Microcomputer stock once again. I haven't looked at them for about a year. Now, NVIDIA, of course, has been the story of the year. NVIDIA stock has shot up significantly, but since then has come back down. Super Microcomputer stock has kind of followed suit, but it's sold off significantly over the past several months. I wanted to break down their latest financials as well as their guidance. There's about 4 bullet points you want to keep in mind. First, their AI looks to be strong. They're seeing demand and they're going to grow into that. That was the good news. The bad news, of course, margins. Gross margins are still paltry. 15% is about average for their gross margins, whereas you take a look at NVIDIA stock, who's printing over 70% gross margins. It's not even a comparison, but that's something that the company's really working on to turn around, and that could be a huge benefit. Another issue that they are having is cash flow, of all things. Now, I don't see any real long-term issues there, and again, this could shift significantly if they were to get increased demand from their AI while at the same time improving their margins. That would help their cash flow situation. Finally, they did guide slightly lower. SMCI stock did sell off and is at a pretty low level comparatively. And this is where I want to start looking at SMCI stock, because this is a stock that potentially could turn back around. Will it be another NVIDIA? Probably not. In fact, they could give NVIDIA stock a good run, but I think that big boom is already over with. And I've always said the same thing when it comes to these semiconductor stocks. Once these major companies build up their infrastructure and they get all the chips that they would need, sure, they're going to need to continually replacing them, but that big boom is already over and those growth rates are already gone. And we're seeing that in NVIDIA's stock, and that's why we're seeing semiconductor stocks by and large selling off. So let's break down. I want to go through the financials and kind of look at the 4 bullet points, the 1 good one and the 3 bad for Super Microcomputer stock. Break down their financials and give you an idea where I think SMCI stock should be trading at. Let's jump in. Here we're looking at SMCI stock chart. This is the daily chart, and my analysis last year, not that I was trying to call the top, but it just happened to be in March of last year when SMCI stock was trading above 120 momentarily. Actually, I think it was just prior to that. And I felt that it was overvalued at that point. I felt that the entire industry was getting pulled in behind an NVIDIA stock, that the NVIDIA was obviously the big story. But now that chapter is closed, what happens with SMCI stock? And this is really kind of the big question. No, I did not see a fall all the way sub 20 in SMCI stock. That is a categorically large drop from 120. I mean, that's what, 80%? At $36 though, I think it's a little inexpensive, and I do believe that there could be some opportunities. Now again, margins, big issue. Let's look at from the latest financial release, the conference call afterwards, these were the 4 main bullet points. They are seeing strong demand from AI, their customers within AI. Obviously good news, but that's only a portion of their business. They deal a lot with other areas, and while there is continued demand there, the revenue growth has not come close to some of their competitors. In fact, their revenue growth has not exactly been increasing moderately like I like. For my portfolio, the kind of companies I'm looking for, I'm always looking for companies that are continually increasing revenue, continually increasing earnings. I like monopoly powers as much as I can. I like companies that really stand out. I am in Broadcom, and I've been in that stock for a number of years. Don't plan on doing anything, even though Broadcom stock itself has been selling off, but that's the entire industry. What I tend to do is I look at my high water mark and I try to hedge positions and make money on my trades in between to boost my overall account. I think we're going to see a lot more selling in the stock market right now where we are. And so I'm looking at some of the gains that I'll be losing in my portfolio, not really caring much because, well, I mean, yeah, obviously I care, but I'm not going to shift out. I don't see a big structural shift in the economy or anything like that. I think that eventually we'll see an eclipse of these prices. But moving forward with the three other bullet points, these were it was kind of a mixed bag with the conference call. Reduction in guidance, obviously, they're reducing their future revenues and earnings for the coming period. Now, here's the thing: it's still pretty high. So, sure, it was, we're not going to quite get there, but we're still growing. And that's something that I think is really important, is that they do continue to grow because the growth rate is strong. Again, we look at that $36 stock price for SCMI stock, SMCI stock. It's still, I believe, a little undervalued. Cash flow issues. It really goes to the last point here, gross margins. Their gross margins really are driving a lot of the issues within. They are not seeing continued increases in revenue like they want, and their gross margins are what I would call uncompetitive when you compare them to an NVIDIA, plain and simple. Breaking down, here's your quarterly revenue, 5.68 for super microcomputer for the quarter. And here's where the margins are. 11.8%. I think off the top of my head, I know NVIDIA is printing over 70%. So going forward, supermicrocomputer should really be focusing on this one thing. And one of the things is economies of scale. If you have a structure or a business and you increase production within that fixed business, you will see increased revenues or increased margins. And that's such a crucial thing. For those of you who've been following me for any period of time, I was covering cannabis stocks for the longest time and really getting in and seeing how they're producing their product and seeing the issues they had. This is something that's kind of like a flash for me. Listen, you've got to increase your revenues to a certain point to get to a point where your gross margins pop up higher. Now, these guys, their highest print is 18.76. That's not even close to NVIDIA's worst quarters. And that should encapsulate where these guys are. They've got to push revenues within their structure they have right now, their facilities they have right now, and from that, see improved gross margins. That, of course, would help significantly with cash flow issues. Operating margins, 6.49. It doesn't get any better. Net margins, again, 5.65. They're keeping $5.65 for every dollar they bring in. Not the worst case scenario. They're positive. There's some other stocks I've been looking at. It's like, wow, these guys are negative. Super microcomputer, it really boils down to economies of scale and pushing more product through the same manufacturing process to increase revenue and gain bigger gains in gross margins. That marginal increase is what's really crucial at some point for a business. But that's also something that, should these guys really start kicking in with more revenue growth, which I do have their revenue growth charts up ahead, that would really empower what's going on with their bottom line. Earnings per share, 51 cents, and projected revenue. This is where things get interesting. They're looking at $24 billion for the year in 2025, $33 billion.19 for 2026. So this is a company that's really growing rapidly. They doubled from 2023 to 2024. They're going to add about another, call it 80%, 65% from 24 to 25. Then another 9, which is about 35% increase there. This might get them to those economies of scale, which when I look at them and say, you know what, maybe they're there. And that to me is really kind of important. Projected earnings per share, we're really going to be focusing on that 263, more so versus the 369. But as you can see, as the continued revenue pulls in, their expectations for earnings per share increase further. So this could be, SMCI stock could be something that from a long-term perspective, especially when you're looking at $36 a share, this is interesting. Now, Treasury yield, 4.25%. We're seeing a lot of selling in semiconductor stocks. We're seeing broad-based selling in this morning when you're watching this video on this particular day, 11th of March, the Dow sold off more so than NASDAQ. So it isn't necessarily a tech issue as much as it is broad-based. And when you start kind of shifting back and forth as to which indice is selling off more, that becomes, when it becomes more broad-based like that because of job issues, it was the quit rate, which the quit rate, I don't know, has ever moved the markets before, but it certainly hit today. So the Treasury yield at 4.25% is moving fast. We've seen a lot of the selling that's going on with semiconductors, with NASDAQ, and now the broad base. All right. 263 is the earnings per share for 2025. You're looking at 36.90, I think was the print when I put this together. SMCI yield. You take that 263, divide that over top of 36.90, you get 7.127%. That's attractive, more so than the Treasury yield. Now, the U.S. 10-year Treasury yield is your benchmark. You start there and you say, is this a good investment? Well, how do you know? You have to compare apples and oranges and pears and peaches and all those things. That's where your comparison starting point. Are there other stocks that are probably going to outperform, say, SMCI? Maybe, but we're selling off across the board. SMCI has already sold off across the board, so SMCI stock would be considered quite inexpensive relatively, and the rest are probably going to catch up and sell off more. So I look at this as a lower risk investment more so than other stocks. So given SMCI stock yield at 7.127%, this is something that could be very interesting if you've been sitting back looking at that saying, And when I analyze stocks, these are how I break things down. First and foremost, what's the 10? Second, what's the yield? Now, what are the fundamentals of the economy? So when it comes to AI, you're still going to get a lot more buildup going on with a lot of companies getting ready for AI. They're seeing strong demand there. They're expecting a good 35 to 40 to 45% increase from 2024 to 2025 revenue increase, and you saw the increase in the earnings per share. That could turn into something special with regard to growth rates. So at 36.90 with the SMCI stock price at this point, I think that's inexpensive relative to what they can get. They are expecting continued increases in their revenue, which would help their margins and cash flow. So if they do pull off these revenue gains, you're going to see their margins improve nicely, which will help their bottom line. A big drive from that, back to the bullet points, is AI demand. Now, they did reduce their future earning revenue potential with guidance, but you're seeing where it's reduced down to. So when I look at SMCI stock, a year ago I looked at them, I thought, you guys are a little bit rich for my blood. I wouldn't touch this. At this price, SMCI stock I think might be a bargain for those of you who are looking to take advantage of AI growth. These guys are a player. There's some opportunities here within the industry. Semiconductor stocks, there's some winners and losers. And although we are seeing selling in certain areas, I think that is because NVIDIA is overbought by too many people who are now shifting. And this might be an opportunity for someone trying to get into SMCI stock. Make sure to follow me along on my Substack channel. My numbers are growing real fast. Thanks so much for following along there. You can get the content up there without having to watch the YouTube commercial up front. I've been trying to push out about 2 stock analysis per day. Then I'm trying to do at least 1 weekly post, which is my premium post. And thanks for all those guys who have been subscribing to that. That's where I break down economic indicators and get in and say, listen, this is the big picture. This is where things are moving. So follow along on my Substack if you're not watching this on there. We'll see you in the next video.